Hello and welcome back to another video. I'm your beautiful host, Young Buffett, and in today's video, we're going to take a look at what people are talking about. We're going to take a look at Wall Street Bets, public sentiment, and Max Payne. We're going to take a look at dark pool data. We're going to scroll through Reddit. I have an interesting read for you guys. We're going to take a look at the price of the stock, and we're going to hold each other, and we're going to cry through this, and we'll figure it out one step at a time. So if you haven't already and you need an emotional support group, scroll down, hit that subscribe button, and let's just jump right into it. So first and foremost, if you haven't already, hop over to our public support group where we hold each other and cry through the losses. This is like Discord, but for investing. We talk about stocks like all day long here. So hope to see you there. But let's talk about what people are talking about. I like to jump over to Ape Wisdom. It covers Wall Street Bets, Wall Street Bets New, Wall Street Bets Elite, stock market, investing, SPACs, options, day trading, and short squeeze subreddits. I like to take a look at this because I like to see where the money's going and what people are paying attention to, because it might create opportunities for us to either scale into something new or scale out of something or do whatever we want to do. So just in case you're new here, by the way, the whole purpose of what we're doing here, we're creating content and tracking this stuff and documenting our journey, talking about highly manipulated stocks, potentially stocks that are subject to short squeezes, but also stocks that I think might be interesting in the future. So I like to keep an eye out on this. I like to see what people are talking about. First thing everyone's talking about is the SPY with a 400% increase in mentions in the past 24 hours. It literally jumped from number 6 to number 1. So it's interesting to see. People are still talking about the overall market. There's a lot going on. China markets are closed until Thursday. Today was weird. The markets are down. There's just a lot of the debt ceiling talk. There's a lot going on, so people are talking about it, so it's interesting, so keep an eye out on that. Then we got Prague. Then we got Facebook, who got absolutely destroyed today. They had a lot of network problems, and I believe Facebook.com was for sale earlier today, so a lot of weird stuff going on there. Keep an eye out and see how they bounce back, but Facebook being down this long, Instagram being down this long, WhatsApp being down this long, it is very, very damaging to the company. So very interested to see how that digests in the coming days. Next up, we have Smile Direct Club, ATER, BABA, Wish, GME, AMC. GME and AMC kind of losing momentum here to some overall market stuff going on. Very interesting. Then we got Tesla, Tilray, Palantir, QQQ, Apple, Camber, AMD, then CLOV. So let's see here. CLOV has a 74% positive public sentiment. So the nearby words include words like wish, bought, buy, more, up, like, long, holders, SDC, still, bags, pump, moon, and GME. So in general, again, as always, people are still talking about CLOV, and it is relatively positive, even though the stock is definitely not. So jumping over to Swaggy Stocks, where we take a look at Wall Street Bets public sentiment, a lot of people talking about Facebook, a lot. So Facebook is dominating this chart today. Then we got Wish, Tesla, BABA, Palantir, Tilray, Apple, QQQ, Amazon, CLOV. So CLOV is, again, working its way up this little list of stocks that everybody always talks about. So this is why I care, though. So I like to see when the stock price goes up, then people talk about it. Do people talk about it first and then the price goes up? What happens when the price goes up and nobody talks about it? What happens when the price goes down and then everybody talks about it? So that's the whole reason why we cover this. I like to take a look at this and document what this flow looks like every single day. I like to take a look at that because, again, we take a look at what people are talking about every day. So if we see an extraordinary jump in mentions, we take a look at the price. Let's see what happens. There might be a trade opportunity there. Next, we take a look at Max Payne. I've said this probably 1,000 times in all my videos now, but if you are new, it is a good recap on what Max Payne is and why it's important. Max Payne is the strike price, and for this week, it is 7.5. It is the strike price at which the stock needs to be at to cause the most amount of pain to everybody who holds calls and puts. So, for example, if CLOV goes down to 5, everybody who bought these puts would make a lot of money. If CLOV goes to 20, wouldn't that be great? But if it goes to 20, that means all of the people who bought these calls would make a lot of money. So who doesn't want you to make money? Market makers. So people who sell you those contracts ideally would want CLOV to close around 7.5 or so. A little bit under, a little bit over, that's okay. But ideally, they want to cause max pain. And with a stock that is so highly manipulated, it makes sense for them to manipulate that as well. The max pain for this week is 7.5. So will CLOV close at or just around 7.5? Very possible. Next week is 8. The week after that is 8. The week after that is 7.5. And the week after that is 7.5. So it does seem to be very, very controlled around the 7.5, and we're currently sitting at 7.14, which is very, very low. So let's see how that all plays out. Next, we have dark pool data. Net short volume of positive 546,000. Net short volume in dollars is positive 4 million. So it's interesting. There are still shorts. They're shorting, and they're doing their thing. I mean, nothing crazy is going on. It's just, it is what it is. Like, I don't even know what else to report on this. We can take a look at all these numbers all day long. But what's interesting is diving into the actual company itself. And I stumbled upon this Reddit post that I'd like to walk through really quick. It's very, very interesting. And it's titled, "Boy, Do I Like Cheap Star Ratings and MCR CLOV." So this guy, who's this guy? Who is this guy? The YOLO God. Makes sense. I picked up more CLOV today, and I will gladly pick up more at these prices. Star ratings plus MCR for CLOV. The medical cost ratio, MCR, compares an insurance company's healthcare costs to its revenue generated through premiums. Okay. The ideal MCR for large groups is 85% and 80% for a small group. Under the Affordable Care Act, the ACA, an insurance company must assign 80% of its premium to activities that develop the healthcare sector. 80% goes to the healthcare sector. Okay, that makes sense. If the insurance company fails to allocate 80% of its premiums, rebates must be paid to the policyholders. Interesting. The ideal MCR should be 85% for large groups and 80% for small and individual groups. An 85% ratio means for every $1, the insurance company makes a 15-cent profit, and 85 cents of that is used to treat the individual that raised the claim. The 15-cent profit can be used to cover costs and reinvest back into the business. Clover, I think, will exceed this MCR in the long term, beating out their peers. Well, that's cool. Claims are the payments made by insurance companies to policyholders for the cost of medical care and prescription drugs. Quality improvement expenses are determined based on the overall improvement in patient safety or patient outcome, patient wellness, prevention of hospital readmission, or improvement in informational technology employed in hospitals to enhance reporting, transparency, and excellence. So he continues to say, on the other hand, fraud prevention activities and insurance broker agent compensation fees are considered administrative expenses under the ACA. Premium is the revenue earned by an insurance company from the monthly payments of their policy. Taxes, licensing, and regulatory fees include federal, state, and local taxes on the revenue earned by the insurance company. Taxes on capital gains and investment income are not included. Not-for-profit insurance companies are subject to either state premium taxes or community benefit expenditures, whichever is higher. Okay, good to know. So now that we're all on the same page, each January, plans can exchange their coverage and costs for the new calendar year. This means that each fall, you should review your plan's coverage and compare it to other plans in your area to make sure that you have the coverage that is best for you. Examine a plan's coverage, cost, drug coverage, the pharmaceuticals and its network to see if it best fits your current needs. That's a mouthful. After considering those factors, You can then use the plan's star rating from the Medicare to help you make a final decision. So now, what is the Medicare star rating? Medicare star rating uses a star rating system to measure how well Medicare Advantage and Part D plans perform. Medicare scores how well plans perform in several categories, including quality of care and customer service. Ratings range from 1 to 5 stars, with 5 being the highest and 1 being the lowest. Plans are rated in each individual category. So Medicare also assigns plans 1 overall star rating to summarize the plan's performance as a whole. You can use the overall star rating to compare performance among several different plans. Okay, so Medicare Advantage plans are rated on how well they perform in 5 different categories. Number 1 being staying healthy, screenings, tests, and vaccines. Number 2 is managing chronic long-term conditions. Number 3 is plan responsiveness and care. Number 4 is member complaints, problems getting services, and choosing to leave the plan. And number 5 being health plan consumer service. Part D plans are rated on how well they perform in 4 different categories: drug plan, customer service, member complaints, problems getting services, and choosing to leave the plan. Number 3 being member experience with the drug plan. Number 4 being drug pricing and patient safety. So, based on the current plans, CLOV is not attractive because it has not been updated to include new released benefits that they have this year. You can compare the plans amongst the other vendors. You will notice that United isn't offering that much. Okay. They lack transportation on their list. This will be added. In-home support. This will be added. Home safety devices and modifications, not included in the last press release, but possible. Emergency response devices, not included based on the last press release, but also very possible. They're going to grow very, very quickly. So do not be discouraged. This will be a matter of time. The benefits that they offer are far superior to their competitors. They are going to replicate these benefits to members as they expand to new territories. Yes, that takes time. You're not invested in a meme stock. I mean, technically it is a meme stock, but I get what he's saying. It's a long-term stock. It's a real stock. It's a stock that has value and benefits and stuff. In my last video, I broke down why CLOV is technically a meme stock. It does move in conjunction with other meme stocks. There is such thing as a meme basket. If you want to look into that, it includes stocks that move based off of momentum and short probability and whatnot. So technically, it is a meme stock, but there are far greater benefits to owning this stock long term. But I digress. Even though the float has doubled, this is a good long term as we have gotten out of the expensive aspects of our holdings, and the institutional investors, we don't have control anyway. If the CLOV retail investors want to control, they are going to have to purchase many more shares to get over 50% of all shares. I don't think we're there yet. This is a great long-term play. Set your mind at ease. You don't usually get rich overnight. Yes, it can happen, but don't expect it to happen over and over or even to you sincerely. So that is very, very true. I think this was very well written and very well researched. It's very interesting to learn more about this sector and how CLOV is competing in this sector. Some of this might have a reason why CLOV was down 4% today. So today was not a fun day, 4.42% down. And honestly, I wanted to sell puts, but the puts aren't even that, the premiums aren't even that great. I would get paid $19 to sell a $7 put. And by selling a $7 put, I would lock away $700 and promise to buy CLOV at $7 a share if it goes below that. And if it goes above that, I get to keep the $19. I don't know. I want the premiums to get juicy here. I also want to sell calls. But even that, the premiums aren't that juicy. But either way, we need to find a way to lower our cost basis. We are sitting currently with 409 shares. down 28.85%. So what are some ways that we can recoup some of our cost basis here? Selling calls helps. What I would do is I would take a look at my cost basis per 100 shares. My last purchase was 100 shares at $7.70. That means I can sell one call at above $7.70 and start to recoup some of that loss that I have right there. I have not sold any shares, as you can tell. I've just been buying. Bought at $13.80, bought at $10.15, $9.16, $9.11, $8.20, $8.90, $8.51, $7.70. So we have buys all across the board. Our cost basis is about $10.03. So technically, I could sell 4 calls at above $10.50, and I'll be in a win-win position. Except all of the call premiums suck right now because CLOV hasn't gone up. So we're keeping an eye on it. We're staying patient. We're holding tight. The overall market's doing some weird stuff. There are other plays. Let me know in the comments if you guys want me to expand this series a little bit beyond CLOV. So we're not just talking about CLOV each day, but maybe we should start talking about how to invest and diversify a little bit, huh? Are you guys down for that? Because, hey, CLOV's not the only stock I own, huh? Let me know in the comments if you're interested in learning more. With that, I love you, and I'll see you in the next video.